crossing over, whether you're a $1 trillion stock or under that, I think that's relatively or that's irrelevant here. I think when we look at the company continues to beat. It's turned from really the risky, going from that high price, low volume to the low price, high volume. And now it's a copy repeat with these gigafactories. And there's also the ability for Tesla to follow the path of an Amazon or Apple. You know, a lot of analysts said that, that Amazon was going to be put out of business by Barnes and Noble, or Apple was a one-trick pony with the iPod. And both of those have proved to be much more than that. And I think Tesla, looked through the lens of an energy story, has a lot of potential here too.
Gordon, B10 in the Wall Street Journal, next EV headache, scarce chemicals. Lithium carbonate prices in China have quintupled from a year earlier. And China wants to be the leading EV supplier. There's supply chain issues and a lot of other stuff. There's nickel, all kinds of stuff. Is this factored into your, you think everything's bearish for Tesla, but is this on your radar screen too, Gordon?
Yeah. I just want to take a step back and talk about EVs in general. EV cars on average are $12,000 to $15,000 more than an average ICE car, internal combustion engine. They have roughly half the range, and they're significantly less convenient to fuel when you think about charging stations versus gas stations. So unless one is an enthusiast and or is willing to pay $12,000 to $15,000 more for their automobile from an EV perspective and an ICE perspective, then EV cars are going to remain a niche. Let's look at market share. Globally, EV cars are less than 5% of the global market share. In the U.S., they're less than 3% of all cars sold. Why is that? Well, in the U.S., there aren't significant incentives. In places like Norway, we're talking about the world, and other EU countries, they literally, via the socialist policies, make it 2 times more expensive to buy a car if it's an ICE car versus an EV car. So excluding, significant additional incentives and or penalties from countries to buy ICE cars versus EV cars, they're going to remain a niche. And looking at Tesla, let's talk about Tesla, right? So Tesla is on a 400-volt technology versus everybody else on 800-volt technology, meaning those cars charge quicker. They're more efficient. Tesla's cars, literally, the paint comes off in the car wash, and you have panel gaps in the cars that are big enough to watch a movie through. Consumer Reports ranked them 27 out of 29 cars, nearly last in quality, and J.D. Power ranked them 30 out of 33, nearly last in quality. There's literally no reason to buy a Tesla now when you have the Kia EV6, you have the Iconic 5, you have the Mercedes EQS. The point is, when competition comes in, like we saw in China, where Tesla's market shares went from 33% to 11%, EU, their market shares went from roughly 33% to 12%. BYD is outselling them 2-to-1 in China. The VW is outselling them 2-to-1 in Europe. When competition comes in, Tesla loses. And when you talk about the company, people say, well, it's more than an auto company. 95% of their revenue comes from selling cars. The other 5% comes from a profitless energy division. So when Jed says they're the leader, they're not the leader, and they're trading at 100 times earnings versus the auto industry trading at 7 times. So not only do I think there's risk in EV stocks because the EV space is going to remain a niche, but I think there's risk in Tesla.
Jed, you point out that you think the demand for EV is totally outstripping that for internal combustion. Is Gordon right? If you want to go 500 miles, and most people, maybe you buy EV for, because you're not going to take it on a long trip. But if you want to go 500 miles, how many times do you have to charge your average EV in 500 miles, Jed?
1.5 times. I mean, but Gordon's wrong on just about every one of those points, except for that of the 800 volts. We agree that, think of voltage as efficiency, and you are seeing a move to higher voltage. But, we often criticize what we don't understand. And the reason that that all the car companies are moving to EV is if there's less embodied energy and energy that's used, and you're selling at the same price, then your economics are going to be better. And so to like ICE versus EV is to say, I like a 3% grower versus a 50% grower. And it just makes no sense. Further, there's a cherry picking of data points that he's mentioning in terms of Consumer Reports. NHTSA has them as the highest crash and safety rating. to like BYD over Tesla just is confounding to me in terms of that point. And in terms of VW, literally, VW has said that Tesla's takt time is 1/3 that of VW. In other words, it takes Tesla 1/3 the amount of time to produce a vehicle than VW, and it's showing up in the margins, which are far higher than the traditional companies.